Yo, thinking outside the candle, part two. I had a couple people ask, like, you know, cool and all, you showed us after the fact, right? It's easy to see after the fact. So, but what does it look like uh, in like real trading? So this is just a combine, just showing for execution purposes, but you can see the positions that I took today, and it's also these ones down here. But I marked them on my main chart here, so we can go through them. So this on the left is the hourly chart that we were looking at last video, and this on the right is the 5 minute. We'll ignore everything else. So on the hourly, we knew we were talking about these sellers up here, right? And we said when market turned away here, it showed us the sellers were right here. Okay. Also, a note on these sellers is I've been wanting to sell this area since October 1st, since it happened. So this is stuff that is already well known ahead of time, right? So we know here are the sellers. So at the end of the day, Friday, we kind of close right up there, and then we open up with a little gap Sunday night. Now we're in the sell zone. I'm I'm taking this trade. So my first entry is at 805.50, and we watch price come down a little bit. Once price comes down here, this confirms that they're sellers. So now, if we take it like this zone is the hourly supply we just created. So let me go like this and show you. So up here, this candle on the hourly, this candle formed, and as soon as the next candle, or as soon as we started breaking lower, this became supply. And that's this zone on the 5 minute. So when that happened, I was looking for a retest of the supply to add to my position. And that's what happened here. We came back up, retested kind of far into it, but retested the supply and then started pushing away. Now, so we knew where the sellers were. The market moves from buyers to sellers to buyers to sellers. It's our job to try to figure out which buyer and seller it's going to go to. Some will have stronger reactions than others, and we have to manage risk around it. But looking at the hourly, the next area I'm looking at for buyers is here. And so the market stops here, goes up, creates demand, comes back. This is what's left of the buyers. So from this area, right here, we come back down and remove the buyers to here. So the area we're looking at for buyers is 57.64 and below. On the 5 minute, that is right here. We got in with the sellers. We know where the buyers are. They showed us this already. So when we start to bounce here, I take a contract off because we don't know. I don't know. Maybe you do, but I don't know. Are these buyers going to completely reverse the market to new highs? I don't know. I don't think so. They don't look that strong from previous price action, but you never know, right? All I know is that there are buyers here. So I want to make sure I take some of my position off. So then what happens if we look at the hourly? We also, we can't form supply up here, came down, came down, came down, formed more supply right here, significant level, pushed it down to buyers. that supply on the 5-minute from here to here. Okay. Significant supply there. So now we're mapping it out as we go. As we learn new information, we map out where the buyers and sellers are. Hit the buyers, we come up in the morning, open up. So I'm still in one contract short from up here. It's break even at this point. We come up into these hourly sellers. At this point, I marked this in the morning. On this green candle, on Top Step, they have the tilt indicator, if you know what that is, but it essentially says how many Top Step traders are long or short the market. So up here on this green candle, a majority, 65% of traders on Top Step were long the market. But we know, Price told us there are significant sellers right here. So I just thought that was funny. I wanted to make a note of that. So what do we do? Okay, so we know this is here. So what do we do at this point on the 5-minute? And it a little bit. We pause here and we turn down. That means this is supply. This candle at 9:25 Central is supply. But, we push down and then we come back in and remove sellers to this point. Okay. Same concept that we were looking at the hourly, but on the 5-minute. We removed the sellers to this box. So when price comes back, so we see a reaction, right? We see a reaction from these larger time frame sellers. That makes me look at the 5-minute. Now I see on the 5-minute, these are the sellers on the 5-minute. When we come back into them, I put a sell order below the pausing candles. Because if it goes below, these candles become supply, like this. That is why I added a contract here. Now, we have these. This would be the third time coming into these buyers. We don't expect to hold. Oh, actually, I think I forgot to mark. I took another contract off, like here, because I had a doctor's appointment and I just didn't want to manage the trade. So this contract is what I got out here. But so we form sellers here. Boom. Start breaking down. We don't expect these hourly buyers to hold at this point, and they don't. So at this point in the day, all I'm thinking is, this is my stop. I'm just dragging it down from supply level. Supply level forms, boom, boom, drag it down. Supply level forms, boom, boom, and it stops me out right here at the end of the day. So you can see by looking at price and determining where the major buyers and sellers are, and then going down in time frame and using the exact same concepts, you can get very low risk, high reward entries. Now, one thing I want to talk about this kind of trading is after these first contracts are put in here, this is my risk. From this average to the top. Right, this box is my risk on this trade. When price goes down, I obviously want to lock in some profits at the buyers. Now when price comes up and I add another contract, my average position is up here. So essentially, the market took on the risk of this trade. I did not take on this risk. This was a free contract from the market. I never when the worst case scenario is I get break even, right? This was all on the market. They gave it to me today, and that's how I like to trade. I don't like putting risk on in the market. If the market gives you it, if the market starts printing like an ATM, why would you ever tell it to stop? Everyone's like, take profits when you see them. No, no. If the market's giving you profits, you say give me more until it stops. At the end of the day, that's where it stopped giving us profits. I hope that helped. I hope it was helpful to see an actual live example and to see how powerful it is to find those little sneaky buyers and sellers. Um, Please feel free to ask questions. I love talking about the markets. I love talking about price action. And I hope this helped.